I started trading 4 years ago and I tried so many different scalping strategies. It took me 2 years to master my scalping strategy. Fast forward to today, I now trade only 30 to 60 minutes a day and I average around $1,000 every single day. In this video, I'm gonna reveal my easy scalping strategy. And guess what? Unlike all these gurus who just talk shit, I'm gonna go into live markets, I'm gonna trade in front of you to prove that the strategy works. It is currently 9 AM Eastern time and in 30 minutes the New York Stock Exchange will open. So it's the best time to trade live. So first I'm gonna prove that the strategy works and then I'm gonna teach it to you step by step. With that being said, let's get into the video. Okay, I wanted to react from that. I wanted the candle to wick it. Alright, I took it, fuck it. Alright, I took like almost yeah, I took a good amount. I'm gonna now target lower. Alright guys, I'm gonna close right here. I just closed right here. I closed this position because of the liquidity. Clean as trade. I made like 1.2k. Bro, trade recap time. So I'm gonna quickly go over this. As you can see, clean as downtrend. Finally we start to move. In the beginning of the session, the price wasn't that clean. Okay, there was some choppiness. Why? Well, most of it was caused from that we would have the 10 AM news. We hit the 10 AM news right here, and as you can see, we still continue this downtrend. We previously had gotten this sweep of liquidity, right? We had this sweep of liquidity. I know in this broker it doesn't seem like it, but it was a sweep of liquidity on most brokerages. This is like barely. In these kind of scenarios, we have to check with the other brokerages, right? But this was a sweep of liquidity, causes this price to go down, right? And then we literally, quite frankly, broke structure right here. This is a break of structure because this red candle closely below the most recent higher low, right? So this is a break of structure to downside. This is now bearish. Then obviously, what happens after we break structure in any time frames? There will be order block. This is exactly what we want to see. We need to see the respect of those confluences. Okay, if there's an order block, we need to see the respect of that. We quite frankly, session opens, right? We quite frankly move pretty shittily, right? We move pretty mid, right? Doesn't move that clean until we tap into this 1 hour time frame bearish order block. We quite frankly tapped into it and start to react to the opposite direction. Now that is exactly how you know that it is good. It is a good order block, okay? Or anything. If there's a liquidity order block, whatever, you need to see the respect. And then after that, we need to see the market structure shift. How can we see that? Well, I personally see that with 2 breaker structures to the downside. After if we were trending up, right? We see the market structure shift. We need to see something that could switch the price, which is, you know, in this case, order block, right? And then we need to see 2 breaker structures to the downside. First breaker structure, as you can see right here, boom. Second breaker structure right here. Now, I would have normally entered off of here, but since we had the news at 10 AM, I didn't want to enter immediately. Why? Because sometimes news could fuck up the whole market, right? So I waited patiently for the news. I explained to everybody in the call. You guys understood why I didn't want to enter. Normally I would have entered this. As you see, it still respects the order block. It didn't pass through it. Then essentially we tap into this 1 minute order block. We create it right here because after every break structure there will be the order block, right? Broke structure once more after the news. I didn't enter right here because this would have messed the risk ratio, the risk versus profit. Obviously we have to get a nice risk ratio to make good money, right? Then I was like, okay, I'm gonna wait for the price to retrace to this new order block. This kind of starts to wick this order block. I entered right here and then immediately we start to react. My first partial, I took like take profit first in this 1 to 2 risk ratio. I kind of wanted to target here, but here was a lot of liquidity, so I just took it in the middle. But I made like 1.2k in this trade. So now you actually saw my strategy real time in the markets, but you may have some questions. You may wonder, well, what is this order block that you made money with today? What is this trend? Well, don't worry at all, because now I'm gonna teach you everything so you can start making money consistently like I do, like my students do. So let me now teach you about the trend, because trends are the lifeblood of the market, okay? It's how these markets move. It's how these markets operate. And essentially there's 3 trends, which only 2 we want to see. There is the uptrend, downtrend, and consolidation. As you saw in the trade that I just took, literally in real market, it was a downtrend, okay? I followed the downtrend, and our job, our one and only job, is to find the trend and follow it, okay? Because the trends, they will continue and continue until there's something that will switch the price direction, like a volume change that we had in the order block. So let me teach you about the trends. When the price moves up, it moves in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? When there's a downtrend, it moves in low lows, low highs, low lows, low highs, low lows, low highs, low lows, right? Uptrend, we need to look for buys. Downtrend, we need to look sells. In the trend, as you can see, this big move is called an impulse. Smaller move is called a retracement. Impulse, retracement, impulse, retracement, impulse, retracement, impulse, right? It's like a pattern, okay? Continues and continues like that. That's how the trends operate and move. You literally saw in the markets. If I literally show you right here, look at this. This is the low lows, low highs, aka impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement. You get the point in the downtrend right here. Look at this. Impulse, retracement, impulse, retracement, impulse, retracement, impulse. You get the point, right? Now, every time there's a impulse retracement, there will be a high, right? This high is this one. And when a new high closes above that, that's when there is something called a higher high. So this is a higher high. And this is a break of structure, right? BOS. Here also, look at this. Why is this? Because this is an impulse retracement and up candle closes above that. This is literally, quite frankly, a BOS, break of structure. Impulse retracement, impulse retracement. Remember, look at this. This is a low low and then a new low low closes below that. What is that then? Break of structure, because this down candle closes below the most recent low low. Again, impulse retracement. This is a low, candle closes below that, creates a low low, break of structure. You have to see the candle close below that, the body of the candle close below that. And retracement, impulse, again, the pattern continues, break of structure, okay? And in these scenarios, I like to buy when this up candle closes, but the thing that I did in that exact scenario, I'm just gonna show you, okay? I'm just gonna show you. So essentially, look at this. In here, when we're currently in a strong trend, we want to look for sells. Like I literally, quite frankly, said that normally when I see an order block instance getting tapped into, order blocks for instance getting tapped into, higher time frame order block or liquidity, something like that getting tapped into, I need to see the trend switch confirmation, and it's caused by two break of structures because it literally shows us the low lows, low highs, low lows, low highs, right? Look at this. This is our first break of structure because what is this? This is a low, down candle followed by up candle, right? This is a break of structure. This down candle closes below that low, and then again impulse retracement is up candle, and then again impulse. What is this? Look at this. This is literally a BOS. Why? Because this is impulse retracement, impulse. This down candle closes below the most recent low. This is a low low, right? It continues. I would have shorted it here, but we had the news, remember? So I didn't short that, okay? I didn't sell right here. Normally I would have sold in here, but then again impulse retracement. As you see, we quite frankly tap into this order block, but you do not know how to spot order blocks yet. You may not, but this is an order block as well. We tap into that, and then we create again retracement, impulse. Again, we tap into this order block. It continues, the cycle continues. This is the trend, okay? We need to sell in the downtrend, okay? This is, and the other traders don't do it like this. The influencers, no offense, but they just show you in the charts. They just back this, but this is fucking real time. I literally took this trade and I took it in front of my students, and this is how we make money, okay? The real time. Backtesting is cool, but this is where the money is being made, okay? I just literally did that. It's currently 10:30 a.m. and that's when I usually end my sessions. 1 hour into the session, right? But regardless, again, impulse retracement, impulse, aka low lows, low highs, low lows, low highs, low lows, low highs, low lows, low highs, low lows. As you can see, we continue and respect the trend, take profit, got hits, made good fucking money, 1.2k. And now you want to know what the hell is an order block. Order block is like a area that has orders that these big banks, institutions, and hedge funds are going towards to take them orders. There's also stop losses of retail traders, and it's like a freaking void of orders essentially, and these big banks can fill their large position with that, if that makes any sense. But that's how it goes essentially when we're dealing with this trend. And there's order break of structures, right? Look at this, break of structures right here. In an uptrend, when we break structure once to the upside, the last down candle right here is the most recent order block. Okay, normally it goes like this, it taps into it, right? But this is the last down candle, because remember, impulse retracement, impulse, when it breaks structure, the last down candle is the order block, right? When it breaks structure, when this up candle closes above that, the most recent down candle after the break of structure to the upside is the bullish order block. Again, in here, break of structure. After the break of structure, after this confirms that it's a break of structure, after this up candle closes above that, the most recent down candle is the bullish order block. Okay, and now in downtrend, as you saw, in a downtrend, when we create the low lows, low highs, aka impulse, retracement, impulse. When this down candle closes below and confirms that it's a breakout structure, the most recent up candle after the breakout structure to the downside is the bearish order block. And as you can see, it taps into that. I know it's a drawing, but still, here again, impulse, retracement, impulse. When it breaks structure, the last up candle after the breakout structure to the downside is the bearish order block. Right here is 2. Last up candle after the breakout structure, aka the retracement. So the last up candle after the breakout structure to the downside is the bearish order block. And naturally, at some point, the price will want to retrace to that, and you can see if it wants to give us the reaction. Essentially, these order blocks, when we're in a lower time frame and you just want to get a better risk-reward ratio or a better entry, you can wait for the price to tap into these order blocks in the lower time frames. But in a higher time frame, they have a lot of impact. They actually have a lot of orders that these big banks want to take. And as you saw, literally, quite frankly, today, look at this. This is the huge 1 hour time frame order block, bearish order block. It got tapped into, and then we created 2 breakout structures to the downside, which confirms the market structure shift. Now, in the higher time frame, we can use that to switch the trend in the lower time frame, if that makes sense. But in the lower time frames, we can use that just to follow the trend, because these are also order blocks. Look at this. This is literally, I'm gonna show you in the lower time frames, lower time frame wise, this is a breakout structure, right here. This is a BOS. Why? Because this is literally impulse, retracement, down candle closes below the low. This is a breakout structure. So naturally, look at this. This is the last up candle after the breakout structure. So this is our bearish order block, OB. And quite frankly, look at this. Got tapped into, and look at this. This is another breakout structure. Down candle closes below the most recent low. Last up candle after that, the most recent up candle after that, right here, it's this one. Right here is the bearish order block. Got tapped into, respected, and that's the key. If we see these order blocks getting respected, that means we need to continue to look for the trend right here, okay? And as you can see, tapped into, respected. I didn't enter yet. Normally I would have entered right here, but I didn't because the news were about to hit. This is another breakout structure, because look at this. This is a low, the most recent low, lower lows, lower highs, aka impulse, retracement, impulse. This down candle closes below, this body of the candle closes below. That's a breakout structure like that. And the most recent, like the most recent up candle before the breakout structure is gonna be the bearish order block. And look at this, got freaking, look at this, break structure, tapped into, it reacts from that, this candle rejects from that order block. I enter right here, and the fucking cycle continues. I just see the respect of those order blocks and these trends. And let me just show you in the 1 hour time frame how did that work exactly. First of all, this is a low, right? And this down candle closed below that. So what is this? This is a 1 hour time frame BOS. As you can see, it is a cycle. This happen in every single time frame, but this higher time frame hold more power and influence. These higher time frames could switch the price direction, right? In the lower time frames, this break structure right here, and we can literally see this last up candle after the breakout structure is the bearish order block. Guys, this is simple, right? Simple. Don't overcomplicate it, okay? Okay, don't forget about this one. This is a real market. There was the reason why it's doing that, because there was literally liquidity sweep, which is a different scenario. This liquidity is now pushing the price. So don't think about this one. We have to think about what was in the price in the current moment, in that moment when I traded, okay? It got literally tapped into. This order block, 1 hour time frame order block, bearish order block, got tapped into. Then we go to the 1 minute time frame. We have to see the 2 break structures to the downside in the 1 minute time frame. One break structure, second, continue, bang, we make fucking money, okay? And then what do we take? I had liquidity marked. This is, guys, this fucking strategy works. I'm trying to tell y'all, this fucking strategy works, okay? Just simplified. Look at this. I marked out liquidity areas that could switch the price direction. This is a goddamn, I think this is a 4 hour time frame low. Look at this. This is literally liquidity right here. As soon as it got fucking swept, the lowest liquidity, this starts to react to the upside. And what, guys, this is how we fucking make money. And I could have continued to trade, but I have a rule that I will only trade 30 to 60 minutes a day. Boom, I could have entered right here, put the stop loss below this freaking order block that we created, remember? Order block. And this fucking, guys, I could have fucking taken this trade right now, but I was teaching you instead. But instead, regardless, I don't even fucking trade at this time. I mean, I usually enter around 10:30 because there's more volume. But literally, I'm just trying to tell y'all, okay? You need to see something that can switch the price direction, whether it's order blocks liquidity, and then you have to see the two breaker structures. If you do not see anything, if you just see constant trending, you're gonna follow the trend with the breaker structures, with the lower time frame order blocks. That's how you make money. I'm trying to tell y'all, okay? I'm trying to tell y'all. And I'm glad you listen, because I have students who are making money, but I'm just saying that people are listening, and so I'm glad you listen, because this fucking strategy works, okay? This strategy works, man. Regardless, essentially, let me just tell you one thing. If you want to learn about those liquidities instead, you want to actually start trading full time, you want to actually become profitable ASAP, then click the first link in the description. It will take you to my free course, okay? Completely for free. You can get it. And if you made it this far, let me know in the comment section. Comment, like, subscribe. As usual, I will see you on the other side. Peace out.